The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, Dow's at 59, S&P's unch. And what did I tell my subscribers this morning? I said, that was number 2 on the list of 19 that we looked at today. I said that, in fact, the UDOW, that's 300% long, might be the near-term trade on a pullback. Never pull the trigger, but boy, that was prescient. One of the reasons why I was looking for some upside action was I've not been able to use, well, it's not that I've been able to use, it hasn't flashed. My Chapman Wave Trin gauge has not flashed a single signal for months. I mean, if I say unusual, I mean it is really unusual, because this thing would work maybe within 10 days to 15 sessions, we'll get the signal going on for ages, and it has an accuracy rate way in the mid-90% area. And what it does is, on the upside, when it flashes a signal intraday, it says that within 2 days, there should be a very sharp move up in the futures, which is translated into the indexes during the day. Now, I'm not sure that this has already worked, because the futures were up. And what I said is that invariably it's the futures up between 7 and 9 points, the S&P futures. So it's really, this particular index is on the upside based on the S&P futures, which translates into a movement of the Dow and the S&P. We're not seeing it in the S&P yet. We've seen it in the Dow. Very nice move up. But I don't know whether it's the 2-day, meaning that it could flow through into Tuesday. Monday's a holiday. Tuesday could be something different. But what's even more interesting is that under the pressure of a GE, which came out with earnings, which were, the stock was really telling us, one of the reasons why in my Traders Corner we are not in GE anymore is we got out, took a little profit, and we got out because it just wasn't acting very well. It's trading at 26.52, down 68 cents right now. Now, normally when you get something as important as a GE, you talk about divergences and all that. We've looked at that for years and years and years. I didn't want to do anything with the divergences. I've got other signals that are saying there is enough residual strength and enough stocks that could allow, even if it's fewer and fewer, for them to bypass negativity, at least for the moment, and hold the market up quite okay, which is what we're seeing. Now, the E-minis did pull back. They pulled back to 1833 this morning. They made a high of 1845. No real big deal here. 1845 back and around the 15th of January, holding a kind of a rectangle formation, holding the 9-period exponential moving average of 1833. So let me do a couple of things here, because I had a couple of requests, in the den, a couple of emails, and I must not forget again to mention, I did go yesterday afternoon, so after my show, I went, as is traditional with me, down to the harbor, Boston, to the New England Auto Show. This is the annual New England Auto Show, but which wasn't an annual show because they skipped 1 year because things were so bad. And last year they did it in January instead of December of 2012. They did it in January of 2013. What is really important, what I've been discussing for 5 years now, then 4 years, then 3 years. First of all, about 5 years ago, I was talking about the Hyundai. You remember that? And what I'd said is this South Korean company is just going gangbusters, haven't got the quality. And then all of a sudden, 5 to 4 years ago, I said, they're getting the quality. 4 to 3 years ago, I said, now they've got the quality and they are starting to challenge, although they might not have the durability and all that, we don't know, but they are starting to challenge the Japanese cars that have such fantastic quality, like the Lexus and the Toyotas and Hondas. And then I believe it was 2 years ago. Yeah, 2 years ago I said, uh-oh, now they're starting to catch up, but they're also starting to push their prices a little bit. Now, you might recall that last year I said, uh-oh, problem. Some of these cars, including the Kia, and of course, as I said, I mentioned the Hyundai, are now pushing the prices so they are comparable to the equivalent bestsellers and top-rated cars like the Lexus, like the Camry, and like the Toyota, and like certain other makes. But they are pushing the price. This year, they've pushed the price even more. And what's so exciting about that is that the American cars, quality-wise, have improved. I know I sound like an old fogey when I say this, but 1955 was a spectacular year, and going to 56 and 57 in the American automobile industry. The innovations, the love for automobiles, the excessivity just got to them with the fishtail and then the fintail and all the different accoutrements, so that we got to a point where the bumper, the front bumper and the rear bumper weighed as much as the car and was fancy. We are starting to get that in the automobiles, which means that I'll be watching for some kind of a top, because I believe if you follow the automobile industry really closely, the size of engines, the type of design, etc. Remember in 2000 when I spoke about the massive boxes that they were using on trucks to create these, we didn't know what to call them at the time, but they were like big SUVs, huge, and that was like a major top at that time. Well, I'll be watching that very closely. Now let's get back to the story, and the story is that Ford, I'm skipping something here, but I'm going to stick with this thing just right for now. It's Technical Friday. We can go to some of the technicals. Ford is trading at 16.60, quite a bit under the 18 level high that was made. What was that, 18.02? Let me just type that in here, 18.18, peak F-top 0.02. Back in the week of just before October, so that must have been, no, in October, 25th, the week of 25th of October, comes all the way down to 15.10. It's really worth watching very closely. If we look at, because GM is acting very, very well on the daily, it's given back that big gap. The big challenge would be, how does it handle 16.99, the high of the 17th of December, before it came tumbling down? And the next thing is, let's look at General Motors. We can't do Chrysler because it's not yet Chrysler. Okay, GE. I keep doing the wrong thing. GE. GM. What am I saying? General Motors. I'm just thinking the two generals today are having a real tough time. General Electric down. What was it, 50-something cents? General Motors down 67 cents to 26.53. I'm watching this closely. I want to start looking at these automobile companies and say, when do I want to get in? And when do I want to get in very heavily? I don't think it's just yet. But it is really encouraging that there are so many things. The tailwind is now behind these cars. They have, and I need to just... Let's see. Let me just do the numbers. The Dow's at 59 at 16,476. The S&P's down 1.5 at 1844. Big discrepancy there. I could have a quick look to see where it is. Let's just go right here. Let's see. You've got, actually, it's tough to say. It's IBM is up very nicely, up $1.24. ExxonMobil is up $1.06. Yeah, you've got certain stocks, as I said before. Select few can really push this market higher. You've got the comp index down 6 at 42.12. What is Apple doing? Apple's down 5 at 548. You've got gold up 11. Now, this is Friday, folks. Usually Friday, gold gets clobbered. But, in fact, gold is doing very well. I know that for my subscribers, we're very happy because we have a couple of metal stocks, and they are really breaking out today, and that's great. In fact, I must say that all our stocks are up, and we only have long positions. I don't want to talk out of turn. Just whoops, a real quick glance because I don't want to make a mistake. Yeah, one is up particularly sharply that we just bought 2 days ago. Actually, two are that we bought just a couple of days ago. So let's go back to the story. You've got gold up 12 at 12.52. S&P, the silver's up 0.32 at 20.38. You've got high-grade copper back up at 335. Hang around the 333 to 339 area, please, copper. I like that. Bonds are what? Bonds are, TLT's down just 2 ticks at 105.02, just missing getting to a leg C in the TLT. Bonds are just holding very nicely at 131.03. Dollar is up 17 cents, and the euro is down 0.005. Just 2 quick things. I need to just quickly finish that thought on the automobile, the New England Auto Show here at Boston at the World Trade Center, I think it is. Very easy to get to, easy parking, everything works out well. So, excuse me, Buick. I was impressed 2 years ago that there was a change coming in Buick. I wasn't impressed that much. I was impressed last year, but I felt that there was a little heaviness to the Buick style. I've never liked the Buick Insignia particularly, especially since they've enlarged it like a big Volkswagen one. I don't like those big Insignias. I like them a little bit modest, smaller than that. I look at these little details. I'm a detail guy. So when I'm looking at the latest Buicks, did I throw that away? Looking at the latest Buicks, the 3 main categories that they have, that's the Regal, can't even remember the names can't remember the names offhand. Each one has, in their range, it's very nice. The sit-in is very comfortable. Not entirely my kind of style altogether, but I like it. I think it's really, it fills in a niche. The Lincoln, they have all these, the trouble with the cars these days, unlike the Buick, which has names, like Cross, etc., they are, Regal, the Ford category, coming out with all these letters and things. I like names. Bel Air, I like the name. And then you can get the categories within that. So as far as the Mercury is concerned, they've made a huge change. It's not exactly my style, although the top of the line, MKZ or something like that, I did like it. I thought it was very nice. Big price difference between the more standard one of the same design, but the upscale one. But the SUV is really nice. I'll go more into this as we go through the day. I think it's worth it because this is a socioeconomic statement.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
In Martinez, California. Hi, Brent. How are you?
I'm doing just great. How are you doing today, Basil?
Very well, thank you.
I'm calling about, I've been searching around the retail space just based on what happened to Bed Bath & Beyond, Best Buy, Sears Holding, a bunch of, there's a general weakness in the retail space.
Yes.
So I've been looking for, which is a little hard to do because most of them have already come off their tops, but I found a couple of retail stocks that as potential shorts. So I have Macy's and Foot Locker, the two I'm looking at. I just wanted your opinion on those two.
Well, Macy's is on my list as a potential short, but I'm not prepared to do anything yet. And the only reason why I say it's a potential short, because when it gives me that sell signal, then I think it's going to be time to look at a number in the area. But I'm not sure that Macy's would actually be the short, because it might fill the gap just 4 or 5 points down, but I'd be wanting the stocks that have the potential to do what a Bed Bath & Beyond did, as well as Best Buy yesterday. In fact, it's very interesting because BBY took the hit, but nobody was really talking about something else. Best Buy made a peak E in the Doji E in the weekly, made a peak E in the daily at 44.66. And it was, in fact, just a single leg A up with that phenomenon I call the single leg A up that can produce an Eiffel Tower up and down pattern, but the previous one had gone peak ABCD, and that 48.83 back in 2010 was that particular high, but the all-time high was 59.90 going back to 2006. I believe that was the all-time high in Best Buy. Now, the whole thing about this is so fascinating because Best Buy is in a category that for many of us, that's one of the only ways you can really get in and have a look at all the different electronic equipment around. There aren't that many places left anymore. Remember, there used to be Circuit City. Now all you do is you see the Circuit City buildings standing around, but there's no Circuit City. I think there's one in Dedham that I drove by recently. Now, what's interesting about this is that BBBY, the extra B comes in for Bed, Bath & Beyond. I have to rename the monthly, not as a B, but as a rare G, and that's called, this is what I call the camel hump, double stochastic top, and also the daily. It has to be the weekly has to be considered a G because there is no C at a top. It's very rare to get it, but it was a perfect peak E top at 80.82 on the 3rd of January. So the way that these things are falling is so precipitous. This is like the Grand Canyon. You're looking, standing on that little perspex or glass shelf, looking down. And it's just straight from 80.82 to yesterday's low of 66. So you and I are looking for the type of move, not a little stair-step move that kind of takes its time. We want something that's really going to turn down. And one of the things that I've been talking about is that I can't find anymore an inverse retail, market vectors retail ETF, which is at a C/G in the monthly chart, and everything about it looks like, you know, maybe you'll be able to make a D, but boy, there could be a very sharp peak E pullback that's occurring right here in the weekly. So this is what I'm going to recommend to you. The Foot Locker, I always have to chuckle when I look at Foot Locker. I don't think we have ever in all the years bought Foot Locker, maybe once, maybe just briefly in my opening call. And yet it keeps coming up. And I remember distinctly, as I saw FL, for your question, it was at 0.95 or $1.50. There was a guy, Chuck Dukas, a fantastic technical analyst, who used to have meetings, and I attended them a couple of times, and then I was invited to actually give talks. And I remember this must have been 1999, maybe, or something like that. Maybe, yeah, it must have been 1999. He was talking about this Foot Locker, 3.19. I think it was even before that. And each time what it's done in the monthly chart, it goes to a peak D and then maybe an E. We went to a peak D in August of 2001, then plummeted. Then it goes to a peak D in 2005, May, and then it takes a big dive, makes another peak D, and then it comes all the way down from the 30 area to a low of 3.65 back in 2008. Then it has another peak, ABCDE has a minor pullback. Again, the 200-period moving average becomes support. And now it's rather extended in what? Yet another leg, E. So this is really worth talking about. So let's do this. We're going to take a quick break here. The Dow's at 59, S&P's down 1. We are on with Brent from Martinez, California. We're going to be looking a little closer at Foot Locker, and then we'll be on with Mike in Ormond Beach, Florida, looking at the Dow. I'll be right back. Basil Chapman, Tiger Technicians Hour.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back. Just real quickly in the den, a couple of questions. One was about NTAP. Great. You know, we have in the den, we have some fantastic traders. Just great eye, just good choices. NTAP is trading at 44.27, up $1. It's only leg C in the daily chart. Leg B, brand new leg B in the weekly, it'll be making leg C if it goes 1 penny above 44.65, the peak D high back in September of last year. And this is going to, the target, I'd say, is very short term, 44.60 to 44.84 will be where you'd expect some kind of resistance, but it looks fantastic. We're going to go back to Brenton Martinez. We're looking at FL, and Foot Locker fits into the category exactly. It is already made. In the weekly chart, I've got it as a ABCD. I know I went through this so many times. It could be an unusual because it didn't break the low. I could call it an F/B, but I'm considering that it made a doji top in the weekly. That to me is more important than the actual label, because I'm watching the stochastic and MACD, and MACD has not even crossed negative, but it turned down. The stochastic's at 93%, so it's really the daily that we're looking at. Now, because of the 2 days that we've just had, and today's a very negative day, it's down, well, I shouldn't say very negative, a negative follow-through day, down 34 cents at 39.15. FL, Foot Locker, is exactly in the category that we would be looking at. Now, there are a couple of things I'm going to do real quickly. Brent, do you have a position in Foot Locker at all, or is this something that you'd be looking at?
Yes, I'm only looking at this point, Basil. Like I said, I've just been doing a search to
So because we're both looking at different things in longer-term perspectives, and when it comes to a rollover in the retail area, I'm going to make the suggestion, and it's a suggestion that you don't even have to rush into, but think it through. It looks to me like Foot Locker could have a bounce, but there's a lot of resistance between 40.26 and I'd say 40.85. So there are two things that you could do. Knowing that there could be a bounce of a point to even a point, I'd say 1.5 against you at this particular stage. If you wanted to nibble on a position, now I don't know if you're looking at puts or anything like that, but if you're looking at just plain short in, I would either start a tiny position right here at 39.15 because you want to get a feel for it, even if it plunges and you've got a tiny position, it's not going to be a big deal. But the best thing is that if it bounces up against you, it won't be a big deal because it's just a small starter position. And the reason why I say probably, even though you've got very good support coming up real closely at between 38.36 and 38.31, the lows of December, my suggestion is that the weekly chart and the monthly chart need to confirm. Actually, the monthly chart is weaker than the weekly chart. So I'm suggesting to you that you get a starter position. Now, you could either say, you know what, over a 60 cents or something, because at that point there should be a bounce. The bounce could come right back to where we are, even a little higher. Maybe it's even worth waiting. But my suggestion is, knowing that this could be a longer-term position play, maybe just a little nibble, and I really mean 20. I'm just talking about a few shares to get so that you get a very good feeling for how the 120-minute chart, which is close to some kind of a bounce level, how it can bounce 39.63, even 40.02. All of those are potentials. So either you nibble right now, or you say, okay, I've missed the best entry point. The best entry point was as it broke down for the second time underneath the 9-period moving average on the 15th. Right there, you could have grabbed it for a little position, but you haven't. So I'm going to say to you, you've got a good eye. I think you've got the right kind of stock, Foot Locker. What will happen is you're either going to miss this completely because it's not going to stop. It's going right to 37, even with a tiny bounce, or it will have a bounce, and that bounce, if it's very strong and it holds for a week or two without breaking 38.50 and gets to 39.88, that's where we will be looking at it even closer to say, does it have strength to go to a new high, or is this just a couch trend bounce in a stock that's changing its stripes from being a bull to a bear? So I think you got your eye on the prize, but the entry point is just a little late in terms of a better position. But maybe a little nibble here at 39.11, and I would only put a stop at about 41.11. That would be a 2-point stop, but on a very small position. I think that that's one way of doing it, because if it makes an H formation and starts to come down, the next time it comes down could be really sharp. So I hope that helps you.
It does very much. I really appreciate it, Basil. I was going to quickly let you know I actually bought a Hyundai Santa Fe just right before the new year, and I'm very happy with it.
It's a lovely car. I sat in one, and I liked it very much. I think they've done a great job. Hey, very nice. Congratulations. Thank you, Brent, for calling. Have a great weekend.
Right, have a great weekend. You too. Take care, Basil.
Thank you. Let's go to Mike in Ormond Beach. Hi, Mike. How are you?
Hey, Basil. I'm doing great. I still got another question regarding the long-term charts of the Dow.
Yes, absolutely. Fire away.
Major indices. Since I've talked to you last, has your opinion changed, and do you still think that in the monthly we will probably go to a peak F before our final long-term top is in, or have things changed, and do you think possibly that if we get a peak D in the monthly, maybe that might be it based on, I heard bits and pieces of your socio-economic things that you're tracking.
Right. So this is part of the bigger picture. Let me just do this quickly. The positive aspect of what's going on in Ford, General Motors, and Chrysler, and I must say Chrysler has improved quality, the Jeeps, the whole panoply of Chrysler products even the design, to my eye, is way better. So what I'm looking at here is something that's very different. It says in the whole socioeconomic panoply of the smorgasbord or the puzzle that we're trying to piece together here, there's a chance that there will be at least 1 or 2 really good years to come in the automobile industry before the market itself becomes so toppy that it drags everything down. That's the one thing. And that's the reason why I'm saying for those in the New England area and you want to go to the auto show, it will be an eye-opener, especially if you haven't been for a number of years. That's number one. Number two is there is an irony in things coming right at the wrong time, because in 1929, you got this, the amalgamation of a whole bunch of automobile companies. There were, just in the Massachusetts area, there were hundreds of automobile companies. So what happens sometimes is they get everything right. Unfortunately, the market doesn't accept that. And if you look at the automobile cars of 1930 and 31, they were, because it took so long to get the designs ready and to manufacture them, they were still coming out with unbelievably beautiful cars, and yet you were in the Depression. So I'm trying to, in my mind, to separate big negativity with big positivity and just trying to focus on things that could go right and the things that could go wrong.
Right.
And the things that could go right could, in fact, if the automobile industry continues to sell 13 million or more cars annually, can you believe it? It's a lot of numbers, 13 million. That's very good for a large proportion of the social, the I don't want to call it the business, but let's call it the, you can't even call it the working class anymore, but it's really good for businesses because there are so many different offshoots, electrical, wiring, just the whole thing, the tires, everything that goes with it. So that'll be very good.
Something I did when you were out, I didn't realize when you were sick, but anyway, I emailed some things to you. All of a sudden, and this is in like national news and a lot of the major like Yahoo homepage, MSN homepage, they have these articles that flash by, and it seems like McLaren has a new supercar available to the public.
In fact, I remember seeing that, yes.
Lamborghini, and it's just
you should have seen the McLarens yesterday. The McLarens are just beautiful cars. I'm not sure I'd get a McLaren, but they are fantastic cars. Yeah, so a lot of things are happening. Not only that, I mentioned to Tom when I was interviewed last night, what I'm looking at is that the automobile industry, the way they were showing the prices of the cars, they'd say 23 and up. Base car 23. Well, the one that you were looking at was not 23 grand. I mean, that was already 28 to 32 with all the accoutrements. So I'm suspecting that they're going to copycat the airline industry, and you're going to land up buying a la carte all these things. The rear view mirrors that, flash your to-do list, everything that you don't really need, but you're looking and saying, gee, you may as well just get it. And that's going to add up to a lot of money. So there are things that are going on that I think are very interesting. Now let's get back to the charts, because I just wanted to put it together with the socioeconomic stuff to say there's a political aspect that I'll talk about just very rarely, and I don't really talk about it in terms of Republican, Democrat. I'm just talking about this particular president and what I think can happen over a period of time. And that's my suspicion, that we might be looking at a bull market that lasts a little longer than everyone's expecting, that there's going to be a major collapse at any point. I think we're going to rotate, and we saw Alcoa moving up strongly. And out of the blue, you've got Alcoa up and the steels are down. This rotation can keep going and keep markets propped up longer than you think. When the IBB, the NASDAQ biotech stocks and the Amex biotech, when they finally collapse, which they will do, they always do it at certain times, then we're going to look for a much deeper correction. and it'll be a pretty severe double-digit correction. But in the meantime, this is what I'm looking at. If there is no new high in the Dow, and we're real close to getting to that point where we could make a new high, but 16,588.25 in the entire month of January, and I just don't think that there's enough downside action at this point to say there can't be a reflex action to get a new recovery high in the Dow. But let's just say there isn't. But peak D will be there, and it's just a little nominal peak D. You could go to leg E next month very quickly. Mm-hmm. So that becomes, I have a whole reading on what happens with a very tiny D to E in monthly charts, or just a small new high at E in a monthly chart. They're two completely different things. So let me just this is, in terms of our thinking that we've been looking at for a long time, I have no signals whatsoever in the monthly charts at this particular point to some kind of turn down and monthly chart. The weekly chart, lovely bounce off the 9-period exponential moving average. Stochastics at 94%. The MACD is good. There's every reason to think that there could be, sometime next week, a leg E in the weekly chart to go above 16,588. Mm-hmm. But the daily chart is going to be very important because it needs to break this pattern that I call the falling axe. And the moment it takes out 16, let me give it a little room, 16,500, and I would give it a little room and say 16,520, closes above that, there's just a really good chance we're going to take out the 16,562 high of the 7th and then go above the 16,588. After all, the S&P's done it, the Qs have done it. I see no reason why it shouldn't do it. So let me answer your question succinctly. I still think we're going to go higher. I'm still thinking E to F is most likely, and that's kind of my position. Okay, great. Well, thanks again, Basil, and your opinion and everything is always very well respected, and like I said, I listen to a lot of different market technicians, and I believe you've been one of the most accurate throughout the years. So, well, I do appreciate that. It's very kind of you, Mike, and thank you very much. And it's a great question. Keep calling with that question. Put me on the spot. I like to have that kind of to tackle that kind of question. My biggest problem is, Basil, I work so much I can't follow every day. I love to listen to the archives every day. I know. And that's another thing too. A lot of people say how bad the job market is, and the company I work for, they practically want me to live there. Well, that's what they're doing, and that's going to have to change very soon. Almost everyone I know who has a job is working really hard because they are squeezing the life out of everyone who's actually working because they do not want to employ more people. They will have to at some point soon. Hey, thanks for calling. Have a great weekend, Mike. Thank you, call again. Bye. Thank you. Let's go to Bob in Rumson, New Jersey. Hi, Bob. How are you? I'm good. How are you, Basil? Very well, thank you. My question has to do with IYT. Yes. The transport index. Yes. So I use your system, and I study charts, and the charts begin to look overextended to me, and then I look at what's happening in the retail sector. And I said, well, how do these goods get to stores? Thinking maybe not today, maybe not next week, but maybe within the next 30 to 60 days, there could be an opportunity on the short side. Want your opinion? Okay, a couple of things. So the IYT is what I've got up here, and that is the transports. Now look at this. The transport, the iShares are down 53 cents at 132.90. United Parcel Service made that big blunder over Christmas, came in late with the deliveries, and yet, look at the UPS chart right now. It's coming way off the low, but it has given a sell signal to sell mode in the daily, and we'll look at the weekly. I'll be right back with Bob.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Basil Chapman. We're going to go right back to Bob. I just wanted to mention for Larry, who emailed me, GoGo, which is the internet for airplanes. You can get them if I think U.S. Air, a number of airlines have them. It's peak C in the weekly. The daily is just a leg B. It's a very small one, but it's a nice turnaround. So yeah, that to answer your question. So it's only leg C in the weekly. Let's go back to Bob. We're looking at the IYT. Now, here's a couple of things that I found interesting. It's a peak E in the daily. MACD is still strong. The stochastic's at 85%, at 134.44. Yesterday, 2 days ago, then it pulls back yesterday and today again. But it's closing above so far it's above the 9-period exponential moving average. And the weekly chart is showing signs that it's a tad overbought, but I don't have a signal yet to say that it's turning down. And the monthly chart looks great in the IYT. So I think, Bob, what we're looking at are 2 different things here. What probably will happen is that it wouldn't be surprising to me that the signal does come from the IYT and maybe it'll be UNP. What's UNP? Is that that's a rail company, right?
Next week you have two large. UNP makes up 12% of the.
Well, I'm watching UNP. UNP is, in fact, Union Pacific.
They report next week.
Right, and it's very important to me because someone mentioned to me years ago that if you put the chart of UNP together with the S&P, or the SPY, you will see how well they correlate, and that just keep following it. And believe me, I couldn't believe it. Every time I thought we were about to tank, UNP bounces back. Now it's got a D in the daily, leg D in the weekly, and a potential doji E in the monthly. I'll be watching this very closely. So you know what? Today is Friday. Tuesday, when we get back, Tuesday, Wednesday. When do you say that UNP reports?
Let's see. I'm not certain the exact.
I'll
date,
check it out, but it's sometime next week. Okay, I'm going to check that out, and we'll follow this closely. I'll give you a lot more about it Tuesday and Wednesday. Okay, great. So that's Monday. So that's why we're out. Okay, I'll be watching it very closely. But my suspicion.
I love your program, Basil.
Thank you very much. We were watching it together. I'm going to put it down in my book for next week, UNP. Got it written down. Thanks for calling, Bob.
Thank you.
Have a great weekend. So let's go to Frank in Baton Rouge, Louisiana. Hi, Frank. How are you?
Hey, Basil. I was wondering if you could help me out with IBM. I've got a short position.
The voice said to me, you've had a short position for a little bit longer than you'd like.
Well, 1 minute 187.25.
Oh, not too bad. Okay, good, because your voice had that tone.
I was positive when it had that 1 day of correction, but it's shot back up.
Yeah, and this is leg D in the daily, in the 120-minute chart. It's leg D. It is peak D so far. If there's no new high in the 120-minute chart, it's in leg D in the weekly. And it's above the 200-period exponential moving average, but it's leg C. And I discussed this H pattern that goes to a breakout, a successful H pattern. You know what I'm going to say to you? I really don't want for you to be vulnerable through the weekend with anything happening over the week on Monday when we're away, if there's really good news, and then we gap up on Tuesday. But I just have to say to you, 2.5 points being short IBM is not the end of the world if it's only going to go about another 0.5 point higher and then turn around.
Well, look, can you pull up the weekly real quick? It has
I've got the weekly. It's in leg C.
It has a nice shooting star on the weekly.
Can I just, before we run out, I've got the weekly. Let me just quickly do this because you might want to think of it through the day. If you're a little nervous about this, you can always make up 2.5 points. It's not a big deal. Take off a little bit right now, and that will be the safest thing to do. I suspect that it's only got about another 60 cents or so to go, and then it's going to pull back a little bit deeper, but not very deep. So let's look at it again on Tuesday.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.